Aloha, this is Kurt Nielsen with eMortgage Hawaii, and this is your mortgage market update for the Hawaiian Islands for March 11th, 2012. I want to start off by just announcing that HARP 2 has arrived. We now have guidelines from our lenders on what they'll do for these refinances. And for those of you that are not familiar with HARP, it's the Home Affordability Refinance Program. And they just made some modifications. The most important modification is that people that own a primary, secondary, or investment property can now refinance their loan to today's lower rates no matter what the loan to value is. So even if they're upside down 120, 130%, you can now refinance without mortgage insurance. I'm going to talk a little bit more about this here in a minute. But the next thing, I just wanted to introduce eMortgage for those of you who are not familiar with us. Really, this is a partnership between myself and Dick Spooner. We both owned mortgage companies in the Hawaiian Islands dating back to the early 2000s. And we decided to combine efforts and employ the latest technology in the mortgage industry. And that has really resulted in a completely electronic system. It's no paper files. We submit electronic files to lenders, and now we're able to generate conditional loan approvals within 1 to 2 business days, 24 to 48 hours after submission. So if I meet a client on a Monday, complete their application, send them their needs list, and if they work on their needs, let's say Tuesday and Wednesday, I get all that information back, get it compiled and submitted into the lender. We could actually have a loan approval by Friday. Of course, we don't have the appraisal back yet, but at least we can start working on conditions while we're waiting on the appraisal. Our company does have one of the most experienced staffs around. We've kept our employees even through these bad times. And, our staff, they know complicated tax returns, jumbo, super jumbo loans, along with just normal, everyday conforming loans. And we do have extended office hours, 7 a.m. to 5 p.m. Monday through Friday. And we are available on evenings and weekends, either by phone or in person by appointment. So give us a call. We pride ourselves on our service, and we look forward to working with you. So let's go on and talk about HARP. Again, the key component of HARP 2 is that there is unlimited loan to value on refinances. The cap previously was 105%. Again, they've just taken off the cap, and it may mean that we don't even need an appraisal. That depends on the underwriting engine, either through Fannie Mae or Freddie Mac, what their automatic underwriting decision is. And if the decision is no appraisal is needed, then you don't need an appraisal. I would expect that we're still going to need at least drive-bys and appraisals on some properties. The lender's going to want to make sure that the property is still in good condition and hasn't been abandoned. The loan must have been originated before June 1st, 2009. So this is only applying to those people that have lost a lot of value since the collapse of the financial markets and the real estate market. So we can only work with people that have a loan since that June 1st, 2009. The loan must be owned by Freddie Mac or Fannie Mae. You can go right online to their websites to see if they own your loan just by entering the address and some personal information, or I can do that for you. If you do refinance and you currently have no mortgage insurance, the new loan will also have no mortgage insurance. So you're going to get a normal loan at current rates. There is a little bit of pricing hit depending on how high the loan to value is. But again, if today's rate is 3.75, you're going to at least get 3.87 or 5 or 4%, and possibly as low as 3.75. So great benefit to those current homeowners that are really underwater on their property. And remember, it's good on all properties, all residential property, primary, secondary, and investment loans. So if you know of somebody that has a lot of investment property and they want to get those payments down, this is the program to do it. There are some conditions. Freddie Mac, you cannot have a 30-day mortgage late in the last 6 months, and only one in the last 12 months. Fannie Mae, I don't quite understand this rule, but they say no 60-day lates in the last 12 months. I'm not sure if this means you can have 12 30-day lates in a row. I don't know. But again, I've talked to a lot of people, and they don't know the answer to that either. It's just either it gets through the automatic underwriting decision and you get your loan, or not. So we'll learn more about that as we start submitting these loans. Most loans require a 620 FICO for primary residences and 680 on seconds and investment. However, there are some loans with no FICO requirement. And also, there are loans with unlimited number of properties. So we've just got to, get the client's information to determine, what limitations are going to be. Now, what does HARP 2 mean to realtors? I think it means that there may be a lot of homes that stay out of foreclosure because we can get the payments down and the people can stay in their homes. So that's the hope. So if that happens, then I think that will tighten up the inventory, and we won't see another flood of foreclosures, coming. And I think that helps everybody. Helps the value of real estate stabilize and maybe even start increasing. So I look forward to it. We're going to learn a lot over the next few months on how effective this program is. We've certainly seen some programs out of the federal government that just have not worked. So that's it about HARP. Give us a call. We'll give you any information we can provide, and we'll research anything that we don't know. So the next thing is a mortgage market update. Just some in economy information. And really this is about the economy. If the economy starts significantly improving, mortgage rates will rise. So it's all about the economy, and it's a world economy, as we all know. So this last week, unemployment was holding at 8.3%, and that's in spite of seeing some labor numbers that would suggest otherwise. That there were some new. We've had 3 months of non-private payrolls increasing of over 230,000 each month over the last 3 months. So we would think that the unemployment might drop, but maybe there's some false hope in the economy right now. Greece has evidently completed their restructuring plan. I didn't think it would happen, but there's a lot of forces trying to keep Greece afloat. It looks like they've at least done that for now. They've patched the holes in the boat for now. That boat still may sink, but we're going to talk a little bit more about that. And then you look at the rest of the economy, like durable orders. Drop a staggering -4%. That's a big deal. Home price index drops more, at -4%. Construction spending down. Factory orders down. The only bright spot has been, the initial claims suggesting that, they're down a little bit, but we really need, they're at 362. We really need them down around 250. And continuing claims is, kind of stabilized at around 3.4 million. And I think that there's a lot of people falling off the continuing claims because they've lost their unemployment benefits. So there's a lot more people than just 3.4 million unemployed right now, or underemployed. And then consumer confidence jumps to 70.8% on what? I don't know. I think it has a lot to do with kind of a false enthusiasm in the market, because I just, based on the numbers you see above there, the economy just doesn't show a lot of life. Although unemployment and initial claims are showing some positive trends, but we'll see. And over the last week or two, the stock market did break 13,000. It's now hovering slightly below that. So we'll see where that goes. The rates will follow the stock market. So as the stock market rises, rates will rise. So it's important to watch the market. I have a feeling that we're going to see some stagnation in the rise of the stock market, unless we start seeing better economic news coming out over the next 2 or 3 months. So what's my near-term forecast? Well, it's based on a lot of things. First, Europe is just in a mess. Moody's has given Greece the lowest possible credit rating, meaning that you can invest in bonds and not expect to get paid back. China's revised their forecast down for 2012, first time below 8% in a long time, so 7.5%. Oil prices are up due to the Iranian conflict with Israel, up to $107. And China and the oil can really slow our economy too. So high oil prices are not good for our economy. A lot of money goes into putting gas in your car, and that keeps us from spending on clothing and other items that might spark some growth in the market. putting money in your gas tank does not grow our economy, that's for sure, because it doesn't employ anybody. Again, unemployment is holding at 8.3% despite the employment figures, and conversely, it hasn't risen despite the negative economic news. So we're kind of lost in a fog right now, and I think there'll be some clarity, I think, by summertime. So the assumption is that if the economy continues this kind of anemic improvement, mortgage rates will rise slowly. That's what I would expect between now and summertime. But we're going to have some real days of volatility. You're going to get a day of excitement over some economic news, and then some despair based on things happening in Europe. So on a daily basis, we could see mortgage rates really bouncing around, which they've been doing for quite some time. And as you can see, here's the volatility that we've been seeing in the market a little bit lately. So right now, the average 30-year fixed is holding below 4%, 3.9%. Our rate is about 3.75%. And again, I keep mentioning the difference between our rate and what the average out there. That's just a lot of profit taking going on. So we should see everybody down here at 3.75 or even lower. Here's some more detail to conforming rates. 30-year fixed at 3.75, the 15-year fixed at 3.125, and this is with rebate. There's no origination fee on these loans, so this is still great, absolutely great. 7-year ARM, 5-year ARM, you can see below 3% with a small, modest origination fee. And look at jumbo rates. Jumbo rates are dropping down to conforming rates. I mean, we're not very far off conforming rates here on jumbo. You can actually get a 30-year fix now with some lenders at as low as 4.125. So you can see the 7-year ARM, the 5-year ARM are all below 3%. So it's a great time both for those jumbo deals and the conforming deals. So I just don't think there's any reason to hesitate. And next week I'll be showing some slides on why to buy and the impact that rates are going to have on the buying decision. And I think it might be something good for you to hand out to your clients. So look for that. My next presentation next week, I'll be getting that out to everybody. Another thing you might want to think about are seller buy downs. We can actually get a 30-year fix conforming as low as 3.25%. It would be with a total of 3.25 points. It might be, that's obviously not a wise investment for a borrower if they're paying it all themselves, but if you can get a seller to help pay that down, that starts to make some sense. So what if the seller threw in at 1.5% of the loan amount? So if it's a $500,000 loan, $600,000 purchase price, it costs the seller $7,500, and the buyer could get all the way down to 3.25% for the next 30 years. I mean, might differentiate your property from other properties out there if you can promote this with your seller. Also, remember, you can get my mortgage calculator put onto your iPhone or your Android or your BlackBerry. This is what it looks like. It's got a monthly payment calculator, home affordability calculator, what can your client afford, and today's mortgage rate. So you just click on that button, and up pops my mortgage rates, and these are hopefully always up to date. Sometimes I miss a day or two. And then you can just hit email to client, and this would go out to your client with your information, the mortgage rates, and my information on contacting me to set up a loan application. So how do you get it? Just go to your app store. You can go to this website if you want, but if you just want to go to this app store, search for Loan Apps, all one word, LOANAPPS. And when you download it, it's going to ask you to activate it. Either enter Dick's cell phone number, 949-279-1172, or my cell phone, 808-896-6800. So that's it. It's good. It's a good little device to keep you current on mortgage rates without having to call or ask about mortgage rates. So with that, I hope everybody has a great week this week. Hopefully the rains are over for a few days. We sure got a lot over the last 3 or 4 days. But and give us a call if you have a client or have questions about HARP 2, or if you want us to start working with one of your clients. Again, my office phone is 3